guys, welcome to HDA Trading Empire. Now in today's lesson, we are going to take a deep dive into confirming candlesticks. 3 powerful confirming candlesticks I use in trading for both sell and buy. But before we dive into the lesson, do well to subscribe to the channel and turn on the notification bell so that you stay updated with every video and educational content I drop. See you. In forex trading, identifying key support and resistance zones is crucial, but simply buying or selling when the price reaches these levels can lead to costly mistakes. So in this lesson, we'll unveil a powerful strategy that emphasizes the importance of waiting for specific candlestick patterns before we enter into a trade. Now guys, we first start with buying confirmed candles, and we are going to look at 3 powerful buying confirmed candles we can apply in our trades. We first start with a hammer candlestick pattern, which is a bullish confirmed candles. This candle is used to confirm buying opportunities in the markets before entering a buy trade. So now one thing about a hammer candlestick is that it normally looks like a hammer. So if you take a close look at it, you realize that it looks like a hammer, and it doesn't matter about a candlestick color, whether it has a red body or a green body. Once you see it in this form, or you see the candlestick looking like a hammer, meaning that it's a hammer candlestick, and this candlestick is used to find buying opportunities in the market. So whenever you are done drawing your support zone and the market gets to your support zone and you see a candlestick pattern like this, which is a hammer candlestick, then that gives you the opportunity to buy into the market. So now one thing with the hammer candlestick is that it has a smaller wick at the top here and a longer wick at the bottom here. So looking at this one also too, it has a smaller wick at the top here and a longer wick at the bottom here. So it's very, very simple. So just take note of this candlestick pattern here, and whenever you come across a hammer candlestick on your support zone, that gives you the green light to buy in the market. So now guys, in this scenario here, you notice that we have our resistance level here, which is at the top here, and we also have our support level here, which is at the bottom here. So now you notice that at resistance, we do what? We sell at resistance and we buy at what? Support, right? So now you notice that the market is currently at support. You notice that the market is currently at support here. And when price got to support, in our previous video, we said that we always buy at support. So now whenever price gets to support, we don't just buy. We have to wait patiently to see bullish confirming candles. And one of the best bullish confirming candles you can look up to is a hammer candlestick, which has been drawn here on our support zone. So you notice that a hammer candlestick has been formed at our support zone here. So once we see a hammer candlestick forming at our support zone here, that gives us the green light to buy into the market. So what we are going to do is that we are going to take our long position tool and place our buy entry right after the formation of the hammer candlestick. So we place our buy position here. Let me try and zoom it so we get a clearer picture here. So I'm extending this, right? So now this is what we want to see in the market. So now that we've placed our trade, we set our stop loss right below our support zone and set our TP right at resistance level. So now whenever you see a hammer candlestick, that gives you the green light to do what? To buy in the market. So when you see a hammer stick formed at a support zone, that gives you the green light to buy in the market. So it doesn't matter about a candlestick color. Once it looks like a hammer, whether it has a red body or a green body, and it looks like a hammer, then you are good to buy in the market. So it's very, very simple. Now guys, the next candlestick we'll be looking at is a doji candlestick. So now with a doji candlestick, this is how it looks like. It looks like a cross. So now you notice that with a doji candlestick, it doesn't have a body. it doesn't have a body. And whenever you see a doji candlestick on your chart, it simply means that there is indecision in the market. So meaning that we don't know whether the buyers are in control of the market or sellers are in control of the market. So whenever I see a doji candlestick, it simply means indecision in the market, and it looks like a cross. So now guys, in this scenario here, you notice that the market is currently at support. So now when the market gets to support, we wait patiently for the next candle to form, and it happened that the next candle that formed was a doji candlestick. So now with this candlestick pattern, whenever I see a doji candlestick, you should always know that there is indecision in the market. So since we want to make buy decisions in the market, we don't just have to enter the market once we see a doji candlestick. So what we have to do here is that we have to wait for the next candle, a next bullish candle to form. We have to wait for a bullish candle to form after the doji candle. And when this bullish candlestick is forming, we have to look at the relative size of the bullish candlestick and the length of the wick. So in our previous video, which is on candlesticks for dummies, I'll put a link for that video in the description so that you guys can have access to it if you haven't watched it. So I just spoke about the body size of a candlestick and the wick of a candlestick. So now we are looking for buying opportunity in the market once price has gotten to support zone, and we noticed that we had this doji candlestick here. So once we see this doji candlestick, we don't just have to place a buy trade. We have to wait for a bullish candlestick to form, and we'll be interested in the size of the body of the bullish candlestick. So if the body of the bullish candlestick is relatively bigger or big, then we are interested in a buy. But if we notice that the body of the bullish candlestick is relatively small, then we are not interested in the buy. So we also have to look at the wick. So you notice that the longer the wick, meaning that there's a high opportunity of rejection, or there's rejection in the market. So like I said, the link for that previous video is in the description box below. Do well to watch that video. So now in this scenario here, I'll draw how I want the candlestick, the bullish candlestick, to look like. So we have, assuming after this doji candle we had another candlestick forming like this, and this is the body of the bullish candlestick. So we have this, then we have this cute wick here, and we also have this other wick here. So you realize that this particular candlestick has a bigger body. This particular candlestick has a bigger body. This particular candlestick has a bigger body, a relative bigger body here. And you notice that the wicks at the top and the bottom here are not that longer. So that gives us the go ahead to buy in the market. So we take our buying tool here, we take our long position tool here, then we place our entry right after the formation of the bullish candlestick. So once we do that, we always set SL below support here. Then we set TP to resistance level here. We set TP to our resistance level here. So this is it. It's very, very simple to understand and easier. So just understand that whenever you see a doji candlestick, you don't just have to enter into the market. You just have to wait for a bullish candlestick to form. And when the bullish candlestick is forming, just take note of these two things: the length of the wicks and the size of the body of the candlestick. The next bullish confirming candlestick we are going to take a look at is the bullish engulfing candlestick. So now what engulfing simply means is that to surround something. So the word engulf means something is covering something or surrounding something. That's what engulfing means. So now it's a bullish engulfing candle. It is made up of two candlesticks. So it's made up of the bearish candlestick and a bullish candlestick. So most of the times with a bullish engulfing candlestick, you are going to see
the bearish candlestick to be a smaller one, and you are going to see the bullish candlestick to be a bigger one. As you see that with this example here, this bearish candlestick is very small, it's smaller, and it has a smaller body size here, and this bullish candlestick has a bigger body here, and it's bigger than the bearish candlestick here, right? So now I'm going to explain to you why it's called a bullish engulfing candlestick. So now you realize that, like I said previously, to engulf something means to cover up something or surround something. So now the reason why it's called a bullish engulfing candlestick is that now you notice that this whole candlestick here, this whole bearish candlestick here, from the top here to the down here, can be found within this bullish candlestick here. So let me show you something here. Let me show you something real quick here. So now this top here, you realize that it doesn't exceed, the tip of this wick here doesn't exceed or move above the wick. It doesn't move above the wick of this particular bullish candlestick here. So you can see that it's found within the range of this bullish candlestick, right? Then you realize that this tip here, the down here, also can be found within the range of this bullish candlestick. It doesn't move further downward than the bullish candlestick, so that's why it's called a bullish engulfing candlestick. So you realize that this bigger candlestick is covering this bearish candlestick here, and from the top to the down here of this bearish candlestick can be found within the range of this bullish candlestick. That's why it's called a bullish engulfing candlestick. And this candlestick pattern is a very strong green light for buying opportunities in the market. Whenever I see a bullish engulfing candlestick, it tells you that it's time to buy in the market. In this scenario, you realize that the market was ranging, and market got to support zone, and when market got to the support zone, it created this bearish candlestick over here, this light bearish candlestick over here. Then we waited patiently, then we saw another bullish candlestick forming here, a bigger bullish candlestick forming here. So once we saw this bullish candlestick, now we realized that within the range of this bullish candlestick, we had this bearish candlestick here. So you can notice that this bearish candlestick is now moving above or below the range of this bullish candlestick here. So that tells us that this is a bullish engulfing candlestick, and we are interested in buying in the market. So we take our buying tool, which is our long position tool. We take our long position tool and we place it right here after the formation of the bullish candlestick here. So now that we've done that, we set our TP to this point here. Then we set our SL right below our support zone. So this is a very simple one on bullish engulfing candlesticks. Guys, in this scenario here, you notice that this is an uptrend here, and since this is an uptrend, we are interested in buying opportunities, and we'll be buying on support zones. So now from this perspective here, when price gets to this support zone here, like I always say, we wait for a buying confirming candle, and I've spoken about 3 solid buying confirming candles you can look up to before placing a buy entry into the market. So if you don't see any buying confirming candle on this support zone here, and in case price continues to come down here, we wait patiently for price to get to this other support zone here, and when price gets to this support zone here, we wait patiently for buying confirming candles, and I have spoken about 3 buying confirming candles you can look up to, so which is the hammer candlestick and the doji candlestick. With a doji candlestick, you have to after a doji candlestick is being formed, you have to wait for a bullish candlestick to form. If you don't see a bullish candlestick forming, you don't have to buy in the market until a bullish candlestick has been formed after the doji candlestick before you can buy. Or you can also look up to a bullish engulfing candle. So I've spoken about buying confirming candles in this video. Guys, we now move on to bearish confirming candlesticks. So now whenever price gets to your resistance zone, you don't just have to sell at resistance, you have to wait for bearish confirming candlesticks before you sell in the market. And one of the candlesticks you can look up to is the shooting star candlestick pattern. So now guys, looking at the shooting star candlestick, which the shooting star candlestick is just the opposite of the hammer candlestick for bullish confirming candles. So for a shooting star, now it has a long wick at the top here, so you can see the long wick at the top here and another long wick at the top here, and also has a little wick at the bottom here and also another little wick at the bottom here, and it has a relative small body here, and this also has a relative small body here. But with a shooting star candlestick, it doesn't matter about the color of the candlestick, whether it has a green body or a red body. It doesn't matter. Once you see the pattern, or you are able to tell whether it's a shooting star, irrespective of the color of the candlestick, you know that gives you a green flag to sell in the market. So a shooting star tells you that you have to sell in the market. And so now this long candlestick wick indicates rejection in the market. So it tells you that the market has rejected this whole area. So this whole area contains a lot of prices here. So starting from this tip here, which is 85.30, to this point here, which is 84.49 or 50. That tells you that price has rejected that whole area in between those price ranges. So whenever I see a shooting star candlestick, it tells you that it's time to sell in the market. So irrespective of the color, whether it's green or red, just keep that in your mind. Just keep the pattern in your mind. So just keep note that it's the opposite of the hammer candlestick, and it tells you to buy in the market. So whenever I see a shooting star at your resistance level, that gives you the green flag to do what? To sell in the market. So it's very, very simple. Now guys, in this scenario here, you notice that this is a ranging market. So whether a ranging market or a downtrend market, once price gets to resistance and you see a shooting star candlestick pattern, you know that you have to do it. You have to sell in the market. But in this scenario, we'll be using a ranging market. So you notice that the market is moving up and down, up and down, up and down within the range. I notice that price currently got to this resistance level here. And when price got to this resistance level here, we don't just sell, because we always hear people saying that always sell at resistance. So when price got to resistance, we didn't just sell, right? So we just waited patiently for a bearish confirming candlestick, and the bearish confirming candlestick that formed was a shooting star. So this was a shooting star that formed. So irrespective of the color, just keep the pattern in your mind. So once we know how a shooting star candlestick pattern looks like, now this gives us the green flag to do what? To sell in the market. So what we are going to do is that we are going to place our sell entry right after the formation of the shooting star candlestick. So we set our entry here right after the formation of the shooting star candlestick. Then we have our TP up to this point here. That's cool. And we set SL to this point here, so right above our resistance zone. So we just wait for the market patiently to hit our target. So it's very, very simple on a shooting star candle. Now guys, The next one we'll be looking at is a doji candlestick. We already looked at a doji in the bullish scenario here, and we are going to look at a doji candlestick pattern in the bearish scenario. So with a bearish scenario here now, whenever I see a doji candlestick, like I always say, meaning that there is indecision in the market, you don't know whether sellers or buyers are in control of the market because it doesn't have a body, it's just a cross, something like it, two lines crossing or intercepting. So once we know that, now whenever I see a doji candlestick at a key zone or a key area, that should give you that that should tell you that there will be a change or a reversal in the market. There will be a reversal in the market. So for a bearish scenario here, whenever we see a doji candlestick, so this is how a doji candlestick looks like. It looks like a cross. So we don't just enter into our sell, we don't just place our sell entry. So assuming you just entered into the market, then you saw a doji candlestick at a resistance zone. So when you saw the doji candlestick at a resistance zone, you don't just have to sell, you have to wait for another candlestick to form. So when that particular candlestick forms, and it's fortunate that it's a bearish candlestick, then that gives us the go ahead to do what, to sell in the market. So we are going to look at a scenario in this case. So now guys, in this scenario here, we are going to use a ranging market. So now in this ranging market, we saw the market ranging, moving upward and downward here, and we saw the market moving to resistance level. So when price go to our resistance level, we don't just sell in the market, we have to look for the next candlestick pattern that will form, then we make our decision. So it happened that a doji candlestick was what formed in the market. So when we saw the doji candlestick, that gave us the idea that there is indecision in the market and it's likely that there will be a reversal in the market. So we don't just enter into the market, so we have to see the next candlestick that will form. So after the doji candlestick, we waited patiently for the next candlestick to form, and the next candlestick that formed, fortunately for us, was a bearish candlestick that formed for us in the market. So if it happens that a bullish candlestick that formed, meaning that we are not going to sell. If it happens that a bullish candlestick formed after the doji candlestick, we are not going to go into the market, or we are not going to sell. We want to see a bearish one. So, and looking at the bearish candlestick, you have to look at the size of the body and how long the wick is. So if you don't understand that, I've made a video on explaining candlesticks, understanding the wicks and the body size of a candlestick, and using it to make decisions, which I'll provide the link for the video in the description box below. So now in our scenario here, looking at this particular candlestick here, you notice that the size of the body here is relatively big, and that gives us our green flag here. And if you look at it here, you notice that we have the wick at the top here, and this wick tells us that there's a rejection at the top here. So that tells us that the market is likely to go down, since there's a wick rejection at the top here and the body here is relatively big. So that gives us the green flag to sell in the market. So what we are going to do is that we are going to take our short position here, then place our sell entry right after the formation of the bearish candlestick here. So we do that real quick. So let me try and zoom it. I think this will be big. So but let's try to keep things like this here. So we just place our sell entry right after the formation of the bearish candlestick. So it's very, very simple to understand. Just have this in mind, that whenever you see a doji candlestick at the resistance zone, we don't just sell in the market, we have to wait for the next candlestick that will form. And if it's likely to be a bearish candlestick, we are going to consider two things, which is the wick, how long the wick is, and the size of the body. So let's try to keep things simple and very basic. Now guys, the next candlestick pattern we'll be looking at is the bearish engulfing candlestick pattern. So actually this is our last candlestick pattern we're taking a look at. So now on this candlestick pattern, if you are to take closer, you're going to see a smaller bullish candlestick here, and you're going to see a bigger bearish candlestick here. So I explained what engulfing means previously. So engulfing means to cover something or to surround something here. So now you see we have this smaller bullish candlestick here, and we have this bigger bearish candlestick here. So now you're going to see that now this bigger candlestick here is overshadowing this smaller candlestick here. So it's kind of covering this bigger candlestick here. It's kind of covering this smaller candlestick here, which is a bullish one here. So you notice that from this entire candlestick here, can be found within the range of this entire bigger bearish candlestick here. So you notice that this smaller candlestick here doesn't exceed or move above the tip of this candlestick here, which is the tip of this wick here, and realize that it doesn't also move further downward below the tip of this candlestick here, or the tip of the wick of this bearish candlestick here. So that's what makes up a bearish engulfing candlestick. And with a bearish engulfing candlestick, this bigger candlestick is covering this bullish candlestick here. So whenever I see a bearish engulfing candlestick, that gives you the green flag to do what? To sell in the market. You can see that market is currently at resistance zone here in this scenario here, which is a ranging market here. So now for a ranging market, you can see that market has got into resistance, and we all know that when market gets to resistance, it's time to sell. No, we don't just sell in the market. We have to look for selling confirming candles before we do what? We sell in the market. And like I said, one of the selling confirming candles you can look up to is a bearish engulfing candlestick. So you have to look up to a bearish engulfing candlestick, and I've already explained how a bearish engulfing candlestick looks like. So now in this scenario here, notice that this bearish candlestick is covering this bullish candlestick here, the smaller one. So with a bearish engulfing candlestick, most of the time you're going to see two candlesticks. You're going to see a smaller bullish candlestick and a bigger bearish candlesticks. And if you see this, now this gives you the green flag to do what? To sell in the market. So it's very, very simple, and I'll encourage you to be practicing, because practice makes man perfect. Be testing it out and see whether it works for you. Actually, all these candlestick patterns works for me. That's why I'm sharing it with you guys. If it doesn't work for me, I wouldn't be sharing it with you guys. Guys, we've come to an end of our lesson on confirming candlesticks. Right now, guys, if you find this video valuable, make sure you hit the like button. And if you have any question on confirming candlesticks, do well to ask in the comment section below, and I'll do my best to answer all of your questions. Thank you guys for watching. See you.